What the hell is going on in the crypto market right now?
Yeah, I mean, it took me by surprise. My base case was that we were going to see the typical year-end rally. Obviously, most of us had the same idea. Usually when most of us have the same idea, it doesn't work. But the other thing I did know is, having come from that finance background, knowing how hedge funds and institutions work, I also knew that if you're a hedge fund and you've got crypto in your portfolio, you've probably had a good year.
In his first interview of the new year, macroeconomist and investor Raoul Pal answers the question on everyone's mind. What the hell is going on in the crypto market? Raoul speaks through why we didn't see a Q4 rally and lays out what he thinks has the highest probability to play out throughout 2022. Make sure to stick around to the end of the video where Raoul gives his take on the building out of the metaverse and explains why Elon Musk and Jack Dorsey are wrong about Web3 being owned by venture capital and institutions. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and can always change your mind.
Everybody fears change, right? That's just a human thing. And the rate of change here is extremely fast. If you're a hedge fund and you've got crypto in your portfolio, you've probably had a good year. So to get paid, you tend to close out your portfolio. So you know what you're going to get paid at the end of the year. So they are incentivized to sell their positions, to go away for Christmas, have a break, that kind of stuff. The institutions like pension funds and others, they tend to rebalance their portfolio. So like Ethereum's up 500% this year. So if they started with a 1% weighting, they're now at a 5% weighting. So they'll probably bring it back down to, let's say, a 2% weighting in line with their allocation. So you've got institutional sellers that never really were in the market before. And they're not expressing, I don't think, a negative view of the market. What they're just doing is rebalancing for year end. And so my general view is that most of that selling is now done. And so the next thing they all come into January with is a new P&L. And, oh, what do I do now? The only answer is I have to buy more.
So basically all this red wave this last week was like people selling, making some profits, and also rebalancing, you think?
Correct.
Okay. Cool.
Correct. That's exactly what I think it is. Bitcoin is roughly about 75% volatility. So it's a very volatile asset. What we'll find is that over time, volatility falls as more people are in the network because you don't have discrepancies between buyers and sellers that create illiquidity because there's more people in the network. So you'll tend to find, Amazon now is trading off call it a 30% volatility. So it's half that of Bitcoin. So I think, as Bitcoin or cryptocurrencies get to 1 billion users plus, what we'll find is that the volatility will fall, the prices become less exponential in nature, both to the upside and the downside. But it should remain in a logarithmic trend. So it's currently about 2.5 trillion. If I look at all the other asset classes around the world, equities, bonds, real estate, they're all between 250 and 350 trillion. If I look at the total derivative market, it's 1 quadrillion. I think there's a reasonable chance of this being a $250 trillion asset class, which is 100x from here, which would be the largest growth of any asset class in all history in the shortest period of time. That will pretty much dovetail in with the idea that 3.5 billion people are using it by, that's just extrapolating the growth numbers of the network. So if 3.5 billion users in 2030, well, the market cap's going to be something like 250 trillion. Yeah, it all kind of backs out pretty straightforward just using network adoption models. Obviously, there's a lot of VCs who want to invest in Web3. But what is ownership in Web3? What is Web3 all about? It's about the community sharing in the economics of the network. Just because VCs have some share of, let's say, a holding company that is setting up a business doesn't give them ownership of the network. This is the difference. Facebook and Twitter, the ownership of the network was only with the shareholders and not the users. So it's a fundamental misunderstanding of what Web3 is all about. Web3 is the shared ownership of the network. That's how I think of it. So I get what he's saying. He's basically saying, well, Bitcoin didn't start backed by VCs, but I'm sorry, but stuff like Square, Strike, stuff like that, the layer 2 payment solution, well, there's venture capital, this and that. Capital needs to come from somewhere. It doesn't all come from individuals, and you're not allowed to raise initial token sales from individuals without it breaching securities laws. So it's a bit disingenuous to talk about it in that way, and it's a bit misunderstanding about what Web3 is. And there's nothing wrong with somebody focusing their attention on one particular area of this new revolution, the blockchain revolution, digital assets. But it doesn't have to be at detriment of everything else. That's crazy. It's not a zero-sum game.
Yeah,
but his idea is if we don't create sound money first, it's all lost.
Yeah.
Okay, that's his opinion, and good for it, Jack. Go for it. Get people around you, build stuff, do stuff. But don't take away from other people doing other things in the digital asset space, because there are other people who are focused on specific things in DeFi or stable coins or interoperability, and they're all equally applicable. Let everybody focus on their bit. That's how distributed networks work. If we all focus on our bit, we've got a massive network of experts all focused on building out component parts of all of this. So the metaverse is not a single destination. It is the increasing digitalization of our lives. So right here we are now. I'm in the Cayman Islands. You guys are in Brazil. This is basically a metaverse experience. This is a digital experience that did not exist 5-6 years ago. So, and we now take it for granted. So there's a lot of people, like half of the entire staff at Real Vision, I've never met in person because of this new metaverse. Distributed workplaces are basically metaverse experiences. So everything is being digitized. The acceleration of that digitization is the metaverse. So when we live in this increasingly digital world, then it becomes increasingly difficult for me to exchange value with you until we've built out this blockchain infrastructure that allows us to exchange value digitally, instantaneously around the world. And it's a network that nobody owns. So, that is a great thing. But as Web3 rolls out, we will stop spending our lives arguing over Solana versus Terra or Bitcoin versus Ethereum. And we all care about the consumer applications of stuff that people won't know or care is Bitcoin. We don't talk about, we're on an internet connection today. We don't care. We're on Zoom. And it could be Zoom, or it could be Microsoft Teams, or it could be whatever. We don't really care either. I don't even know what computer you're on. You don't know what I'm on, what internet network you're on. None of that matters. But it's the consumer application that's going to come. And NFTs were the first sight of a consumer application. They're still very geeky. It's still a crappy environment. The wallets are still impossible. Most people don't understand why you want to own a stupid picture of a monkey. None of this really makes sense. The art market was a little more understandable. But, my guess is once large communities of culture, so music and sports predominantly, and probably fashion, those three are probably the largest cultural influences in the world. Once they start adopting it, which is happening at NFT level, but I think it's also going to happen at social tokens level, then we will all understand what it means to have the Web3 idea of a stake in a network. And that's the game changer. And we won't think of it as a cryptocurrency or whatever thing. It's like you're participating in that network. It's much like if we'd had all been given shares in Facebook when Facebook launched, we would have all participated in that network. We didn't, though.